Yeah, good morning, everyone. So yesterday, U.S. market moved up sharply, mainly driven by corporate result, and in that also Metas has declared very good numbers, which has moved up by almost around 23% yesterday in the U.S. market, and that's why the Nasdaq was up by around 3% over there. But after market, a lot of other company came up with the number, including Apple and Google, where the numbers were below expectations, and we are seeing some corrections in the U.S. market. Mostly around half of the gain which was there in the yesterday market is now negated by these corporate results which came after the market, and futures are down on that account of the international in the US market. Today morning, even in Asia also, the trend is more of a mix, wherein Hong Kong and China are down more, mainly on account of concern emerging that the announcement of further step by the US by the Chinese economy is still awaited, and people are in expectation of that has purchased the stock are now somehow booking the profit. So that is having some negative impact on the Hong Kong and China market, and that is also getting reflected into commodity as well. Oil is down by around $2, and steel and iron ore are also down by almost around uh, 2.5 to 2%. So mixed reaction from international market, but we are struggling with our own problems. And are remaining range bound in recent past, and we feel that the similar trend can continue even in today's trade, or we may see some bounce back in today's trade. Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, today we expect positive open and remain a range bound level. See, we next 1 to 2 week we saw that range, that Nifty upside range comes around 80, 17, 840 in 900, and downside 17, 470 and 400. This is a major range for Nifty for coming 1 to 2 week. Do we expect Nifty trading within this range? If Nifty comes near the support zone, that is 14,500, 470 level, then we expect again bounce back towards 17,780, 740, 840 and 900 and upside. So today we expect positive open, and if Nifty managed to sustain 17,700, then next level will be the 17,815 and 17,900 in upside. Support place around 17,500. Bank Nifty also same range. We saw that upside range around 41 800 and 700, and downside support range around Bank Nifty is 39 700 and 40,000. We expect Bank Nifty also trading this range only. So today we expect positive side, upside immediate resistance place intraday basis 41 320, and then 41 600, 41 700 is the next target for Bank Nifty, and immediate support place around 40,300 and 40,000 at downside. Nifty Finance also trading the range. First immediate support range around 17,940, 17,740, and upside 18,260, 18,390 is the next immediate resistance for Nifty Finance. To this stock specific, Cummins India looks positive at current level right now, trading around 1449. But we expect this momentum to be continued towards 1530, 1540 and upside, and support place around 1420, 1410 at downside. ITC also looks positive, already given a breakout and trading in a high, all-time high. So we expect for a rally to be continued. In just upside, in next immediate resistance around 390, 298, and intraday immediate support place around 368, and below 368 next support zone around 358. So ITC looks positive at current level. Lawrence Lab trading the oversold zone. We expect bounce back at this level. Last three trading session, we saw that Lotus Lab take a support around 324, 320 level and bounce back that level. To expect it managed to sustain 342 level, then we expect the further rally towards to 370 and 319 upside. So if Lotus Lab break the 342, then we expect the positive momentum towards 370, 390. That's it for technical derivative guy.
Yeah, thank you, Vikas. On the derivative front, important thing is the data hasn't changed much. The VIX continues to remain, lower now. Since the budget is over, it is coming down from 18. It has come down to 15 again. That is good. PCR also is below the one level, so it's at comfortable levels. Open interest is still low. So all in all, the data is positive. We are seeing good base formation around 17,500, 17,600 strikes with lot of put writing going on around these strikes. So that is another positive. We expect Nifty to remain range bound in between 17,500 to about 18,000 levels, with 17,500 being a strong support on the downside. So all in all, we are opening positive today. If we open above the 17,700 level, we might witness some buying coming in, which can take the Nifty higher towards the 17,900, 18,000 levels in a couple of days. So look out for the same. From the stock specific front, as said, some of the banking names have seen a lot of short covering, and they are likely to do well. So the likes of ICICI Bank, HDFC Bank, Axis will not Axis. The third bank is IndusInd Bank, which can probably do well. All these stocks had seen, lot of shorts and covering have been seen. While in Axis, we are not seeing much of short covering action, and probably it might remain range bound. From the IT pack as well, we are seeing good buying going on in Infi, Tech Mahindra, TCS. So these stocks are likely to do well as well. So yeah, look out for the same. Yeah, so that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Most life insurance companies have clarified the impact they would have on budget proposal, which announced that income earned from all life insurance policies, excluding ULIPs, with a premium of above 5 lakh rupees will be taxable. So impact on annualized premium equivalent for HDFC Life will be the maximum at 10 to 12%, for ICICI Prudential at 6%, and for SBI Life it will be the lowest at 2%. However, all stocks have already corrected, HDFC by 15, ICICI Pru by 10, and SBI Life by 9%. This correction is much more than the impact that will be there on the APE. So any further correction will make them attractive for buying. SEBI has clarified its approval to Aberdeen Investment Management, formerly Standard Life Investments, to sell its remaining stake in HDFC AMC of 10.21%. Whenever that happens, that will be like a sentimentally negative as a hangover on the liquidity in the stock. IndusInd Bank, there is news that RBI has given in principle approval to Hinduja Group to raise its stake to 26%. Promoter holding in the bank currently is at 16.5%. A year back, the chairman of the group had said that promoters would enhance their stakes in multiple tranches to 26% once they receive RBI approval. So now they have got it. So this is sentimentally positive for IndusInd Bank. HDFC result is in line with expectation. Performance is stable. A growth in individual loan book after adding back loans sold in the preceding 12 months was strong at 26%. Growth in total loan book was stable at around 18%. Management is confident of housing demand trends sustaining going ahead and expects individual loan growth to continue to remain healthy. Credit cost came less than estimate, and gross NPA came at 1.5% versus sequentially 1.6%. So improvement continues. We remain positive. Karnataka Bank result has improved. Asset quality was broadly stable, although slippage ratio has slightly increased to 2.4% against 2%. Credit cost came at 1.1%. And more importantly, ROA was at 1.2% in line with management guidance of more than 1%. Conversely, stock is trading cheap at just 0.5 times price to book. We remain positive on Karnataka Bank. So whenever basically the Bank Nifty comes in action and there is some traction again on the sectoral side, Karnataka Bank can outperform the banking stocks. Aptus Value Housing Finance result has improved. AUM grew 31% year on year and 6% sequentially. Asset quality was stable with GNP at 1.4% and NNP at 1.1%. We are positive from long-term perspective. Ujjivan Small Finance Bank result is again above expectation. Since last 3-4 quarters, we have seen this bank delivering result which is above expectations. Credit cost remained subdued at almost zero. All asset quality metrics improved with net NPA remaining at close to 0%. Restructured book also continues to decline, now at just 1.4% against 2.3% last quarter. And management is confident of delivering about 2% ROA in next year also. As against that, we are getting the stock on FY24 price to book multiple of 1.2 times, which we think in a good market and good with good sector tailwinds can increase to 2 times also. So we remain positive on Ujjivan Small Finance Bank. That's it from my side. Thank you.
Good morning. Birlasoft has posted decline set of numbers for the quarter. The deal win signed for the quarter came at 231 million. Revenue came in at 148 million, which is down 0.3% QOQ, majorly due to furloughs. EBITDA margin came in at 11.4% versus QOQ of 14.7%. Excluding the one-time provision impact, EBITDA margin came in at 13.4%. Management indicates of sticking to its 15% EBITDA margin. However, the timeline is not defined. Overall, management indicates operationally Q4 to be better than Q3, excluding Invacare deal. Outlook is neutral. Aegis Logistics has posted above expectation numbers for the quarter, although the revenue came in a bit lower, 3.3% QOQ. However, margins have improved to 10.4% versus QOQ of 7.8%. Stock is trading at 25.1 times FY24 EPS. Thank you.
Yeah, good morning. APL Apollo result was marginally above expectation. Sales volume stood in at 0.61 million ton versus 0.4 million ton year on year. Volumes were higher mainly due to debottlenecking in existing plants and the expansion from Raipur. The management has indicated a further capex of 400 crores for debottlenecking in its current plants as well as in its Raipur, Dubai and Kolkata plants, which will help them to reach capacity of 5 million tons by FY25. The Raipur plant is currently operating at 25% utilization, and going forward in FY24, we might see some good improvement in utilization, where the super value-added products will be sold. Currently, the value-added products from Raipur plant contributes 61% of total sales, 60 to 65% of total sales, and going forward, it will improve to more than 65%, and the general products will come down. The company is targeting to reach EBITDA per ton of around 16 to 18,000 per ton by FY25, mainly driven by its super value-added products from its Raipur plant. And also the association with Shankara is yielding good results for the company. Management has guided its volume to be 2.2 million ton in FY23, 3.2 million ton in FY24, 4 million ton by 25, and 5 million ton by FY26. So we remain positive on the company. Orient Cement had its con call yesterday, wherein the management has revised its volume guidance from 6 million ton to 5.8 million ton. Although demand is robust, cement prices continue to remain weak. Uh, the costs are likely to stay at an elevated levels for the company in next 1 to 2 quarters due to higher cost inventory. So we are neutral on the company. Thank you.
Good morning. Tires announced its result. The result was ahead of expectation. Revenue came in at 6,423 crores versus an expectation of 6,200 crores, which grew by 8% sequentially and 13% on a YY basis. The demand momentum in the medium term looks positive, while there may be some headwinds in the near term. EBITDA margin came in at 14% versus an expectation of 13%, even as cost of materials consumed rose around 12.3% on a YY basis. It fell 3.5% QOQ, indicating a softening in raw material prices. The company said that the domestic demand has helped them tide over the recessionary trends elsewhere. European operations have still outperformed the market in the first 9 months of this fiscal. The stock is trading at a PE of 15.5 times FY24 EPS. Thank you.
Good morning. Berger Paints India Limited result was below expectation. Revenue grew by 5.6% YOY at rupees 2,694 crore versus the expectation of 2,830 crore. It has witnessed a volume growth of 6.6% YOY. The company has strengthened its distribution network by adding 8,000 retail sales points and 4,300 color bank machines installed during the 9-month FY23. Construction chemicals registered a strong growth, and it expects to gain market share going forward. The margins came at 13% versus the expectation of 15.6%. So the overall profitability was impacted due to the high inventory built up in anticipation of the festive season, which lasted throughout the period, and hence the company could not take the benefit of lower raw material prices, which impacted the gross margins. Further, it has observed the lower sales of exterior emulsions, which impacted the product mix, and also currency depreciation was a major reason for the margin contractions. The commercialization of new manufacturing facility at Sandila, Uttar Pradesh, from February is expected to improve their operating leverage and working capital improvement. The stock is trading at a PE of 42 times to FY24 EPS. Dabur India Limited result is broadly in line with expectations. Revenue grew by 3.4% YOY at rupees 3,043 crore versus the expectation of 3,091 crore. Overall volume for the quarter grew by 3% YOY. Domestic business grew by 3.3%, whereas international business grew by 14% YOY in CC terms. During the quarter, company's beverage business observed strong growth. E-commerce witnessed 40% YOY growth, while double-digit growth reported in modern trade channel. There was a degrowth in volume for hair oil and toothpaste in HPC segment. Gross margin contracted by 280 basis points YOY to 45.5%. So EBITDA margins were stable at 20% on account of sharp reduction in ad spends by 220 basis points. The stock is trading at a PE of 43.6 times to FY24 EPS, and the outlook is positive over the long term. Titan Company Limited result was below expectations. The revenue grew by 15.7% YOY and 26.7% QOQ at rupees 11,609 crore. The jewelry business grew by 11% YOY. And watches and wearables segment grew by 14.6% YOY. Also, eye care business grew by 11.5% YOY, and emerging businesses grew by 71.8% YOY. During the quarter, Tanishq opened its first boutique in New Jersey. There was a store expansion pan-India for Titan World with 24 new stores, Helios with 17, and Fastrack with 7 stores. Also, Titan Eye opened its first international store in Dubai. And if we look at the overall EBITDA margins, were at 11.6%, which was largely we can say impacted by the negative EBIT margins of emerging business of 19.1%. So the stock is trading at a PE of 51.9 times to FY24 EPS, and the outlook remains positive, where we are expecting there would be a positive margins in the emerging business in the long term. Crompton Greaves Consumer Electric Limited result is below expectation. The revenue grew by 7.5% YOY, and there was a degrowth of 10.8% sequential at rupees 1,516 crore. This was largely on account of subdued consumer demand and increased competition. Also, there was a transition in fans business to new BEE norms, and it observed challenges in its pumps business. The EBITDA margin came at 10.1% versus the expectation of 12.4%. The stock is trading at a PE of 28.7 times to FY24 EPS. Deepak Fertilizers and Petrochemicals Corporation Limited result has declined. Revenue grew by 40.9% YOY at rupees 2,755 crore. Chemical segment revenue grew by 37% YOY with segment margins of 28%. And fertilizer segment revenues grew by 47% YOY with segment margins of 5%. The EBITDA margin came at 16.7% versus 18% last year in the same period. The stock is trading at a PE of 6.6 times to TTM EPS. Thank you.
Yeah, one or two more stocks. Most of the stocks are covered. Man Infra came up with the numbers, and the numbers were quite strong. Both the division has performed well in this quarter. Their EPC business has also grown and improved the margins, and also the real estate business has shown good growth in this quarter. Valuations also looks attractive for Man Infra, so outlook for Man Infra from here looks positive. So that's all from us. Now I'll request commodity team to take up from here.
Yes, good morning. Good morning, everyone. Yesterday we witnessed profit taking across the commodity. So on pullback today, we recommend to go short in gold around 57,950 to 58,000, and maintain a stop loss of 58,200. On lower end, 57,700 seems to be the area where you can take profit, and fresh selling could be witnessed if sustains below 57,700. Overall prices can test 57,400 to 300 levels. Silver to sell around 71,000, and keep a stop loss of 71,600. On lower end, 70,000 to 69,500 seems to be the target where one should take profits. Crude oil 6,300 was the support area, and breaching below that. So we recommend to go short around 6,300 and maintain a stop loss of 63.70. On lower end, 6,200 one can enter long and maintain a stop loss of 61.50. So it could be all in a range bound movement in crude oil. Natural gas, if 200 holds, then pullback can be witnessed. Else, the counter is oversold, so pullback could be expected. But overall, lackluster movement in natural gas. In copper, we recommend to go short. 780 is a good area where one should sell and maintain a stop loss of 785. On lower end, 770 seems to be the target. Uh, Similarly, zinc also one can sell at 294 and maintain a stop loss of 296.50. On lower end, 290 is the target we are looking for. That's it from me. I'll ask Riya to take over from here.
Thank you, sir. Good morning, everyone. So on the currency front, the Indian rupee declined as the risk sentiment in the nation changed with the Adani Group crisis. Dollar also rose in the second half as the ECB and Bank of England came out with their policy, monetary policy. The ECB has lifted the interest rate by half a point to 2.5%, with President Christine Lagarde saying another such move is almost certain next month, despite seeing that the inflation outlook is improving. Has also committed that the increase has left room for a change in the increment with a policy path evaluation coming in May. Thus, declining core inflation could lead to a downshift from 50 to 25 bips for a final hike in May. After that, there might be a pause that could be coming in for the ECB as well. Bank of England has also signaled a fastest pace of interest rate. They did a half a point rate hike to 4%. However, strong pay growth and ongoing shortage of workers are driving the price pressure in the economy. If you look at the Bank of England's latest forecast, it has showed that the inflation is likely to fall sharply this year to around 4% from the high of 11.1%, and it could be below 2% in the 2024. So this is indicating that a slowdown in rate hikes might be afoot. If you look, the Bank of England's latest policy decisions and forecast is also suggests that they are very close to peaking in the UK, and perhaps another 25 point hike is likely in March, and then they would also go likely for a pause onto their rate hikes. Thus, as advised yesterday, going short towards the end of the session from the highs, we have seen quite a gap down happening into the euro and pound. It closed to around 90.50 and has opened to around 89.62. In the intraday session, 89.50 will remain a strong support. If it breaches that, the bearish leg will continue towards 89.25 and you can go short. For the pound, 100.18 will act as an important support. If it breaches that, then on that front also bearish leg will continue towards 99.75. So one can go short. In the first half, you could see some pullback happening as well. So just follow the levels while taking position in euro and pound. For JPY INR, it has opened on a positive note at around 64.19, and it is most likely to consolidate again in today's session unless it gives a breakout to the high of 64.32. Once it gives a breakout to this level, you can go long for a target of 64.50, 64.65. However, the move will be sluggish. You can put support or SL at around 64 levels. For rupee, you could see some profit taking happening, and you could go short below the level of 82.15 for a target of 81.95. The fall should halt there, and you could again see a reversal happening on the wider outlook. Rupee most likely to again test 82.70, 83 levels in this month. So, however, but in the intraday session, look for a breakdown of 82.15 for going short into the pair. So that's all on the currency front. Thank you.